Welcome, everyone, and thank you for joining us. This INN webinar is brought to you in partnership with Prismo Metals. Today's session is titled Inside the CEO Playbook, Weighing Risk, Reward, and Value Creation in Junior Mining. Before we begin, just some quick housekeeping reminders. All attendees will be in listen-only mode, but will have an opportunity to ask questions to our speaker during the Q&A segment. You may post your questions at any time during the presentation by typing them in the Q&A box. This webinar is being recorded, and all registered attendees will receive a link to the recording and be able to access the presentation on demand within 48 hours after this event. Today's discussion explores the fundamental pillars that drive and create shareholder value. Projects move through different stages of risk, and external forces can dramatically shift outcomes. What separates successful investors from the rest is the ability to understand these moving parts and interpret them with insight and discipline. And our speaker today is here to break this down for you. It's now my pleasure to introduce our presenter. Alain Lambert is the CEO and co-founder of Prismo Metals. He's a lawyer and by training and has over 35 years of experience in financing and advising small and medium-sized companies in various industries, including technology, manufacturing, and natural resources. Alain has been involved in private and public financings totaling more than $1 billion and has an extensive network of investors, investment bankers, analysts, and investor relations professionals. He acts as an advisor to public and private companies on matters of financings, mergers and acquisitions plans, debt structuring, and going public transactions. Alain has served as the chairman of the Quebec Advisory Committee to the TSX Exchange, Venture Exchange, and sat on the Exchange's National Advisory Committee, a committee of experts that advises the Canadian Small Cap Exchange on policy matters, proposed regulatory changes, and business strategy. And with that, I hand you over to Alain.
Thank you very much, Mary Lynn. Welcome to today's presentation. Hopefully everybody can see my screen here. I'm going to move to the next slide. Hopefully that works. There we go. So what I'd like to do today is take a few moments to help those who are in attendance and those who watch the video later on, not live, but once it's posted on the INN site, to share my experience in order for people to become better investors. And becoming better investors, I think it comes from understanding some of the basics of investing in junior companies. In the case of my talk today, junior exploration mining companies. And I'll try to establish my credibility first and tell you about myself. So as was mentioned, I started my career as a corporate and securities attorney in Montreal. And I started investing in the stock market at a very young age. I think I had my first brokerage account in 83 or 1984, thereabouts. And we were in the raging 82, 87 bull market. My first lesson was, it's easy to make money. And it was so easy, and I was so enthusiastic about the market that in August of 1987, with two buddies from law school, we each left the practice of law and went into capital markets advisory. And then October 1987 came, and then that was my second lesson that it's actually not easy to make money in the stock market. And so between 84, 85, when I started investing to today, there are many lessons that I have learned, and the purpose of this chat in great part is to share that with you. Now let's also mention, how did I get into the resource space? It was somewhat by accident. I was always in capital markets advisory, as I said, and as was stated with respect to my bio, taking companies public and raising money and being on board of directors. And that was until 2015 outside natural resources, or I should say mining. I did some oil and gas stuff, but outside of mining. And that changed when I had the opportunity to get a work visa to move from Montreal to Tucson, Arizona, with my family for 4 years. And when I came to Tucson, I met two doctors in geology. One's Craig Gibson, who's our chief exploration officer, and the other one is Peter McGaw, and Peter's well known co-founder of Mag Silver, and has got his name associated with many discoveries. And later on met other people that are extremely talented in the resource space. So the little that I know about geology, which is growing every day, I got from some very reputable people. So with that, let's get into the talk about the people. So the let's start with the pictures. So when you invest in a junior exploration company, the first thing you need to do is, who are you investing with? And those are the people. And there are two extremes. One extreme is the geologists, who very often will have left a big company, so very talented technically, maybe not familiar with how to run a junior exploration company. And at the other end of the spectrum is the pure promoter, and there are lots of those around. And so I would say the first thing that one needs to do before investing is learn about who the people running the company are. I'm not really going to get into an additional layer of complexity that sometimes people running the show are not necessarily the insiders, but that could be a topic for another day. But safe to say that I personally don't invest in exploration companies run by pure promoters. Not to say that you can't make money, but that's not how I choose to make money. I don't choose to trade stocks all day long. I don't have time, and neither do I have the inclination. And experience has proven that it's a bit of a sucker's game. And then I wouldn't necessarily want to invest in a company that's run by talented geos that have never run a public company. And because some of the skills necessary to run a company are not only the geologists, the people with the capital markets experience. So I look for a good mix of all of these skill sets. Very important to have the talented people. As I said, we have two doctors in geology at Prismo Metals, and you can have I like to say, a marginal deposit or marginal target, and the right people will make a go at it. Just like you can have a very good mining project, and people who are not talented won't be able to move it forward. So the other thing I added the last point here just before the presentation, because as a CEO, I communicate a lot with my shareholders, and I thought one of the things that people should be looking for when they invest in a team of people that have all the right skill sets. One thing that you need as a shareholder is to make sure that not only the people are talented, but they are really good at communicating with the market. Very often we see people say, well, where's the update? Why is there not an update? And the reality is that sometimes there is no update. And I see that myself as a CEO of a junior exploration company. People will call me. They'll call me 2 weeks later. Nothing's changed. But it's not my my place to say, you know what, there's no update. There's always something new, and the way we communicate in between material news releases, which we do a lot of videos, we post them on our social media channels. We send it to our database, and so we try to stay in real contact with our shareholders, because sometimes the update might be, well, you're going to drill 5,000 meters, and you can say, well, now we're at 2,000, so there's 3,000 left, and it just keeps people engaged. And when management teams of companies do that, I think it illustrates a commitment that they have to their shareholders, which is very important. Now, projects. I always say, and I'll say it again later, know what you invest in. There are very different styles of mining projects, and you need to know exactly what it is that you're invested in. So you've made the decision. I like the people. First thing, I like the people. I like the team. And now I'm ready to consider an investment. And so there's the full gamut of projects, which are greenfield. They're projects where people go back to something that's been drilled in the past. Or people like us, we tend to focus on smaller projects that are well defined and surrounded by large companies, which would create somewhat of an exit for us. That's our game plan. That's the way we like to do things. So sometimes if you go to where things are known, maybe the probability of increasing or finding a reserve or defining it is easier than greenfield. So you really, I think, when you get into you make the decision to invest in junior exploration, I think you need to spend some time defining for yourself which types of projects you want to invest in. They all have a different risk profile. So how much of the risk are you ready to take on? And then the market theme, the flavor of the month, which to me is a red flag. So there are a lot of, we all know, so that, people will be promoting themes, which doesn't mean that they can't do very well. So let's just take antimony. A lot of people get into antimony. So I would say, as an investor, if somebody's pushing antimony hard now, it's a red flag. It's to me, it is. Doesn't mean you don't invest. Doesn't mean you don't do your homework, and doesn't mean that the project is not legitimate. It just I think tells you to do a little bit more digging, and that ties back to the people. So if you go back to the people, and the people have a history of promoting flavor of the month themes, then just be aware and be careful. All right, price and timing. So now you've decided to invest in the management team. You've done your due diligence, and then you sort of know what kind of projects you want to invest in. What's your risk tolerance? And then and that ties into the Lassonde curve. Where is it that you want to get into a stock? So the top right is the famous Lassonde curve, which is, the life cycle of a mineral discovery from initial, call it staking or purchasing or optioning, understanding what's on the ground, doing sampling on surface, getting a permit, drilling, making a discovery, defining a discovery, all the way to mining and opening up a mine. So that's call it the theoretical. It's not theoretical. It's a practical way of, where people can invest at different times. And I decided to share with you a live example of that, which is for a number of reasons. A, because it absolutely illustrates the Lassonde curve. Number two, it's a great success story, which is Vizsla Silver, and it's my largest single shareholder in Prismo Metals. And so just keep that in mind. So now you say, well, I want to invest, and I understand there are people that want to invest, for a few days, for a week, for a few months. But most of the people that I know that are wealthy or have a large portfolio, and I mean retail people who have a full-time job but invest in the market, they tend to be longer-term shareholders. Doesn't mean that you can't day trade or you can't get lucky. But I'm not here to talk about luck. I'm here to talk about what I feel are some of the things to focus on when investing in our industry. So Vizsla, they went into Mexico. They assembled the Panuco district for the first time, which is a prolific silver district. And if you start in 2020 from 30 cents, 20 cents, they made a discovery. So the stock went to 280, and maybe a little bit overdone. And then it retraced back to 120. And then after that, in 2021, they were able to make other discoveries and confirm the size of the initial discovery. So the stock went back to 360. And then it's in 2022, all the way to 2024. Well, guess what? Now we're going to have a mine. So we need to do a resource calculation. We need to do a pre-feasibility study, a feasibility study. We need to raise hundreds of millions of dollars. And you get to early this year, everything comes into place, and the stock goes from 240 to 7 and change. Yes, of course, the price of silver has been favorable lately, which has contributed to the movement of the stock in Vizsla. But as I said, this tells you exactly how the cycle works in the Lassonde curve. So you can have, whatever, you can make 6 times your money on a discovery, or you can make 4 times or 3 times your money on the build out of a mine. So again, just to illustrate what's your risk profile, and be sure to know what it is that you're investing in and at what point in the cycle you are. You should just, I think, not go from stock to stock to stock, but you should identify stocks that have the right management, the right projects, and now talking about the right timing. Where is it in the Lassonde curve? So you want to make a bet that there'll be a discovery, or later on you want to make a bet that that discovery that's been confirmed is going to get into production. So again, completely different style of investment and different timing of that investment. Politics, it goes without saying. You got to be careful and take into consideration where the project is. So I have here Panama. We heard recently in the copper feel how some projects have not moved forward, been confiscated all over the world. It happens. And we are primarily at Prismo Metals in Arizona, and that's by design. We like the jurisdiction. Our chief exploration officer is from here. And so we feel very, very comfortable with that. And not only the jurisdiction is important, the permitting in that jurisdiction is important. And so that you should, again, learn those things yourself. So I'll give you an example. So if you want to permit in Arizona through BLM, Bureau of Land Management. Very easy, very straightforward, very friendly. If you deal with BLM in Nevada, not so much. And so you need to understand, because there's always a lot of noise, right? So I'll go to people and present Prismo, and they go, "Is it BLM?" "Oh yeah, it's BLM." "Oh, that's terrible." And it's like, "No, it's not terrible. It's actually great." You got to cut the noise and be specific about in which jurisdiction you're in, and how easy it is to permit projects. Now I'm going to wrap this all together. I will say this. So I'm at an advantage to a lot of people because I've been investing in the geo market since whatever I said, 80, call it 83. And so there are a lot of things that come to me naturally. And then I'll talk to some of my investors or friends who are investors. It always shocks me how little they know about the markets. They know little about what they're investing in. There's a lot of sort of proud movements. People tend to, follow each other, and then if you read the book about the tulip mania back in Europe many moons ago, there's a people that all have. It's human nature for people to get comfort, to be part of a crowd that's all making the same decision. And the more that happens, the more it is that no one has any understanding of what's happening. And because they all think that the other guy next to them that has the same great idea must have done the work. And the reality is that most people don't do their homework. They're just crowd followers. And being a crowd follower is you're delegating your due diligence to somebody else who's doing the same thing. And so if you do that too many times, you're going to end up being on the wrong side of the trade most times. So I would say you got to learn the basics and use the tools. And I've got CDAR there and got SETI. It shocks me that some people don't even know the difference between SETI and CDAR. Personally, whenever somebody offers me an investment tip, let's call it that, or a recommendation, the first thing that I do is I go on CDAR and look at the most recent public filings. I like to read prospectuses. I like to read annual information forms and the bio on the people that are involved. And I like to look at the stock structure and SETI, who owns what, the price they paid. And that takes time, and you have to invest the time to do your own homework. You can't go to CEO.ca thinking the guy who's answering you knows more than you do. Probably doesn't. And then you get into this thing that I mentioned where everybody follows each other, and at the end of the day, nobody's actually asked the right questions and done any homework. And so if you do your own homework, you're going to know the basics. You can't just ask somebody else how much cash is left in the company. You can't ask, when are they going to be drilling? You need to know these things yourself. You can't ask somebody, well, how much does management get paid? You got to know this firsthand. Are they spending more on stock promotion than drilling? You need to know that yourself. And so I would like to leave it at that for now. We've got an hour. I'm happy to take questions, and I'm going to stop sharing my screen.
Right.
Here we
Thanks,
are. Okay.
Alain, for that great presentation. I I have a few questions for you. So let's start with the first part of your presentation on people as a value driver. Your presentation, you've highlighted the distinction between good management and good resources. Like, could you provide sort of your key criteria beyond bios? How should investors be looking at when they're evaluating, a good management team? Like, what are maybe your top three things that you look at when you're evaluating a company's management team?
So I would answer it this way. So I think the first thing you need to know to do is read the bios. And and what the bios are going to tell you is who who's the capital markets in person in the management and who is on the technical front. And as I said earlier, if it's tilted just one way, I would personally not be tempted to invest. If all the skills are there, yes, more. The one thing though is that we like to do when we present our technical team, we call it successful explorers. So there are a lot of experienced explorers, but not too many successful explorers. So you need to when you evaluate management, um, make sure that there's somebody in there on the technology on the technical front that either has had a discovery or was part of a discovery or was closely associated with a discovery. And then the other thing is age. There are a lot of people that is attracted in our market, and nothing replaces experience and expertise that's gained over many, 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 many years.
Right. Striking a balance is between all the technical and the management skills is definitely a key. So we have a question here. What is your impression of mining in Ontario?
Um, I love Ontario as a jurisdiction. I did have a little bit of experience there. I also like Quebec. I like Manitoba. I like Newfoundland. I like and New Brunswick. So those would be my top jurisdictions in Canada. I
Mhm.
think it's a very good jurisdiction. Government. Through my experience, I realize how amenable they are to mining in Ontario.
Yeah, maybe as a follow-up to that, with recent developments with the Carney government, declaring nation building projects and maybe putting a new focus or spotlight on the mining sector, especially with critical minerals. Like, what are you seeing, in terms of the attractiveness now of becoming, of Canada or as a whole, or Ontario, or where mining projects are in terms of investability now?
Well, yeah, so that's a great question. We've seen a lot of cash go towards that. We're seeing the same thing in the States. I think people have risen up to the fact that you can't let China have all the critical minerals, and when a sudden change is needed and a lot of capital needs to be invested in the short term, then I think that's the right thing for governments to step in, because it talks about national security. So I thought that what Prime Minister Carney did was really, really good for the mining industry and for Canada as a nation, de-risking ourselves.
Right. Another question from an attendee. What do you think of cost funded mostly by VCs? And how about flow throughs?
Yeah. So two aspects. One is flow throughs. Um, that's an important question because in Canada there are people who um, will finance themselves through flow through funds that have a short lifespan, and and so they need to sell the stock when it's free trading, and we can see that that's problematic for stock prices. So I would say if you're an investor in a company, you should pay attention to who they use to do the flow through shares. Like I've seen a friend of mine, CEO of Amex Exploration, so he did some flow through things with through some charity, and he had a big gold company by the resulting stock, so there was no overhang as a result. But there are people that just they want to drill, they want to do some exploration, and they'll take money from any company that is in the flow through. So be careful. And let's say the VC, I would say it's not necessarily VC, but there are a few funds that invest in the junior markets in Canada more and more, especially if it's a life offering, which offers free trading stock. And the performance of these life offerings have not been really good in a lot of cases. So, I like companies where there's a big retail participation, and where the shares are distributed among many people. And I also like when management participates in financings.
Right. So you've mentioned in your presentation about themed projects. Another question is critical minerals, rare earths, lithium, they're very trendy just now. Are they real? Or are they one of
I
those?
think they're absolutely real. Yeah, I think they're absolutely real. And one of the reasons I say that is it ties back to your question about Carney and the governments. And if you look at what's happening in the U.S. as well, where the current administration has been very active at the federal level in making sure that there is national production of these critical minerals and rare earth and lithium. So I don't think that that's a flavor of the month thing. I think this is here to stay and will be supported by governments, and there'll be more discoveries in Canada, in the US, which it's going to be good for us, us as nations.
Yeah. And going back to jurisdictions, what about Saskatchewan, which is rated number one by think tanks? Yet you didn't
So
mention.
I meant to say Saskatchewan. I said Manitoba. I
Oh,
love the people from Manitoba, but I meant to say Saskatchewan.
close neighbors.
Thanks for correcting me.
Another question here. Is there a ratio winners to losers one should expect?
Oh boy. Um, I think, well, not I think. Let's start this differently. So the odds are against us as investors, right? So, and what I mean by that is there are very few discoveries that can lead to the type of returns that we've seen, let's say, on something like Vizsla Silver. Now, there is enthusiasm at different points. So let's say as a discovery. So if I went back to the chart of Vizsla, I went from whatever 40 cents to 80 on a discovery. Well, that could have been a few lucky holes and led to nothing. And so the odds, the geological odds are against us. One thing that I see people do often is fall in love with something, and also to start wishing that their initial decision is going to turn out to be the right decision. I'm fast to sell stock and take losses if I have to. If I see something that's not the way it is supposed to be, especially on geological front, I have no problem taking a loss, and that's probably, I would say, the biggest lesson from today is just don't be afraid to take a loss, because it's all about opportunity cost. If you, I mean, just look at Emerita, Emo. People fell in love with that thing, on the basis that they were going to win a court case in Spain. I never understood the gamble, and people, decided to stay on it because they were in love with the stock and the story. And I think that could be a mistake.
Hmm. Another good question here. Do you consider infrastructure like refinery, location, availability versus transporting concentrates?
So I would answer this more generally is yes, you should look at the infrastructure. So there are good projects, but if you have to use a helicopter to bring everything in, um, including drill rigs and people, you're going to have a cost associated with that that might be prohibitive. So if you look at Nunavut as an example, there's a couple companies that made a large copper discovery there, a couple juniors, but it's so expensive and the access is so terrible that the economics might not be there at the end of the day. So you might have that nice discovery, but it'll sit there for a very, very long time. So we like to have access to roads and electricity and water, and not so much in where we are for transporting concentrates because we are explorers, so we don't want to get to that stage. Now that said, we think ahead, and if we're going to sell to a major, of course, the infrastructure needs to be nearby.
Mm. Another, maybe just a follow-up in terms of the jurisdiction question, beyond North America, when evaluating, when investors evaluating a project that's in a jurisdiction that may have, shorter, easier permitting process, but against, geopolitical stability and all those types of things. Like, how do you balance that? Like, what do you look for in terms of balancing that?
I'm old school. I believe in law and order, and in constitutional rights. So so we're in Arizona. I think Canada is great. I think the US is great. There are parts of Europe that have seen more and more exploration. That's great. There's stable countries in Africa, and I would say it's not for me. I've seen too many stories where it didn't turn out to be good, and you see it even with companies like Barrick. So it's just an added risk that people take, but again, I mean, the reward might compensate for the risk or justify the risk, right? So you've got a bit of a political risk, but you might say, well, we've got this great project in Africa, and if we hit, the stock's going to go up. And at the end of the day, 2 years from now, if the government kind of takes it over, I'll have sold my stock. Again, that's not a game I play, but I can see why some people might speculate on the, although there's quite a bit of risk, political risk.
Right. Access to capital is still tight in Canada, so struggle beyond resource, reserve phase, and into scoping, PFS, FS. How do we overcome these?
I would say, I wouldn't say that access to capital is still tight. What I think, the way I'd describe it is capital is pretty choosy. And so because clearly the capital is there and people are doing deals and there are big financings being done every week. I think it's very in a lot of cases smart money. And then I go back to my first topic, which is the people. So if you're invested in a company and they have a great project and it's an advanced project, but they're struggling to raise money, then I would say, well, maybe just reassess your initial conclusion that was the right people to invest in, it might just be uh, a bad share structure, or it doesn't mean that people are not incompetent. That it doesn't mean that people are incompetent. Not at all. That's not what I'm saying. What I'm saying is, typically, if there's an advanced project, it should get financed, and if it's not, then the right thing to do is to reassess the management, and then reassess if they truly are as advanced as you feel as a shareholder.
Hmm. So, still on financing, how about high net worth investors from the US? Do they use some vehicle to invest in small junior Canadian companies like a foreign LLC or trust, or do they invest with their own personal name?
So I have not seen any issues for most people in the U.S. to invest in Canadian securities. Um, the problem they have is to sell those securities, right? Because if you participate in a financing with a Canadian issuer, we as the issuer have to put on the certificate or the DRS what we call a U.S. legend, because the shares are going to be restricted from trading from a Canadian securities law perspective, but also from a U.S. perspective, which is much more onerous than um, than Canada. Now, to buy in the market, many companies, I would say most exploration companies, are listed in the U.S. On the OTCQB or QX. They have DTC, which makes it easier for people to access. And the same thing is true for Europeans. So it's very rare that I get a case where somebody can't invest in our company or can't buy the stock in our company.
Hmm. Now, this from a lithium investor, I guess. Brine Lithium is about half the price of hard rock lithium, but DLE is still a ways away. Yet, so how do we reconcile this as investors? Short term, this year versus midterm, next 3 years or longer?
Unfortunately, I'm not a lithium guy. So, but 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 it's a smart question. So I'm gonna try to help here and say, I don't know. What I would do, and I probably will do, is um, after my bike ride on Saturday morning when I get back home, I'll probably spend time on the internet and research that, because it's an interesting question, and I think that's what people should get in the habit of doing when they have these questions. I go back to, don't let you know don't make the assumption that the guy who's telling you why actually knows what he's talking about. So invest the time and get to the uh, to the answer, and don't be afraid that the answer is not some that don't be afraid that the answer might be something you don't like. And if the answer is negative and impacts your investment, then factor that in.
Yeah. And that question was from an anonymous attendee, but if you that for that person, if you want to maybe ask directly to Alain, send him an email, or
Sure.
maybe he'll have an answer for you after his bike ride. So many rare earths to the stocks to pick. Which will be the best three this year or next year or the year after?
Oh, yeah, yeah, yeah. I don't have an answer for that one either. A, because I'm not a rare earth guy, I haven't looked at it. But then again, I mean, I now maybe that's the next search on Saturday morning, and find out. Yeah, that's interesting, and as I said, I mean, I don't think it's a fad. I think there's a real push towards exploration for rare earth, increased funding. So I'll be looking up that one too on Saturday.
Mm. And maybe for the benefit of our attendees who may not uh, still be familiar with what Prismo Metals, is up to, maybe provide us some a brief overview, what project you're working on and what should investors expect from you.
So Prismo Metals has three projects in Arizona and one project in Mexico. The project in Mexico called Palos Verdes was the initial project where we had some nice discoveries. And then we became surrounded by Vizsla Silver on three sides. And they, over the years, they invested in our company. They're still today our largest shareholder. We don't have any plans for further exploration there. We're just going to wait out a little bit here to see what Vizsla is going to do in our part of the district. Obviously, we have an excellent relationship with them. We love, we like these guys. They're great guys, very, very talented. And then we have a copper prospect called Hot Brecha in Arizona, which is a large target, which we're going to hopefully partner up with someone in 2026, and we're going to go drill it. It's reminiscent of the Resolution copper deposit just up the road from Hot Brecha. And the Resolution Copper is a joint venture between BHP and Rio Tinto. It's the largest unmined copper deposit on the planet. And that leads to our main exploration project called Silver King. And Silver King is what I like to describe as the hole in the donut, and the donut being Resolution Copper. You can go on our website. We got some nice map there. We're completely surrounded by Resolution Copper. And we are fully funded. And next year we're going to be drilling 2,000 meters at Silver King, and all of the details are on our presentation.
Okay. What's your take on ETFs that are focused on critical minerals, infrastructure, clean energy, etc.? Could it be a good idea to hold these alongside individual stocks?
Again, I like that question. I think that would make sense. It's got to come from a reputable firm. The costs of running the ETF need to be low, so you got to look at that. But I would think that if, these ETFs are probably going to outperform individual stocks most times. Obviously, if there's a discovery and you were lucky enough to own the stock before a discovery, you're not going to see on ETF these types of returns. But for someone who say, well, you know what, I don't want to start picking at individual stocks because I don't have time to look at 10 companies to choose the three that I like because I'm busy and I got 3 kids and a full-time job, then ETFs certainly is something that would make sense.
Maybe this is a follow-up to that. What minerals or commodities do you work in or look for, I guess, will this change next year? Will you ever go to construction and production phase?
So we are focused on silver and copper. And we didn't suddenly become interested in silver because of stock price. We've been in silver since the inception of the company, and both in our project Palos Verdes in Mexico and our Silver King project in Arizona, and Silver King has some copper targets because of its it's 3 kilometers from Resolution, so we're in the halo, so there's a lot at play here, and I'm going to unpack that. So I like these two commodities. I do have investments in gold companies. The majors have done so well, and sometimes investors, retail investors, will not think about the big guys and the big stocks because they're $50 or $60, But when gold started moving up or last year, this year, I think there was, people should have allocated some funds to the bigger companies, the bigger mining companies, some of the mid-tier companies. And because if you like the sector and you like the commodity, that's the way I would play it. And diversify the risk and not try to chase headlines and where's the next 50 meters of X metals. So always remain diversified. If you like gold, you should like things like Barrick.
Right. A question on your back to your presentation around the Lassonde curve. It's central to understanding price cycles in mining. Where do you think most companies or investors misread the curve, and how can they better identify where true value is in that?
So yeah, such a great question. So first thing, you need to know where you're in the curve, and so as we used Vizsla Silver, so they went from 40 cents to 280 on a couple good holes and all the way back down almost to $1, and that's the discovery phase, so the left side of the curve. So you need to know as an investor, if you play in that part, it's not going to go to $10. Maybe it will because there's some good promoters out there. But the reality is, there is a point where if you're there for the short term, you gotta take a profit. You can't get greedy. You got to take a loss if that's what you have. And I mean, it's really understanding where you want to play in the curve and how long. What's your investment style? If you're there for weeks, well, maybe you're better off on the left side. If you're a long-term investor and you want a little bit less risk, you're going to be more in the middle of the Lassonde curve, and so on and so forth.
Maybe we have one more. We have time for one more question. Do you follow indicator metals to get to good copper, silver plays? And what indicators do you look for first?
Okay, I'm not sure indicator metals. Follow indicator metals to maybe I'll ask that question that viewer to
Yeah.
maybe explain a little bit more what indicator metals,
Right.
what he means by that. Yeah. And then what indicators do you look for first? I think that might be in reference to the investment decision, that one. And it truly is the people. And there was I'll give you an example. I got a nice position in in a stock called Provenance Gold, PAU. And they, some friends from Montreal that put it on my radar screen a while back, and got in last year. The stock did very well and sold. And I went back in, I think it might have been August or September. And at that time, the stock was being hammered because people were disappointed. And I remember watching a video from the CEO, who's a geologist. And I already had vetted him, and I was comfortable with him. But I mean, he was so sober in his approach to the project and calculated and clear in his thinking that I went back and bought a bunch. So again, the people. I mean, there's so many videos of that are available on all these investments. That people should take the time to see if you're interested in investing in a stock. I mean, I got a call this morning out of the blue. Some guy from Germany called me up, and he had been watching a lot of my videos and made his investment decision based on that, which is great. I mean, he was, and then he just, after the fact wanted to talk to the CEO, and so we had a nice chat. And so I would say, yeah, number one indicator would be the management team. Take the time, just look at the video, look at the body language. Is it a lot of arm waving, or is it a lot of technical discussion that is done in a way that you can understand what they're talking about?
Mhm. In your opinion, who's the best spokesperson or some to represent, a mining company, a junior company, public facing? Is it the geologist or, the businessman? Like, what are your thoughts on that?
Okay, so that's a great question. So I'm not a geologist, but I'm the face of the company. And as I said, what I know about geology, I learned from doctors in geology, and so I was very fortunate. Um, and so I do an okay job at that. Our Chief Exploration Officer, Craig. I'll say this with a lot of affection, but he'll put anyone to sleep. He's a brilliant, brilliant geologist, like brilliant, but it's not his thing. He has a soft voice, and somehow he can never get excited about anything. So you would think that he'd be the right guy, but it just does. He doesn't have the persona. So I think you go back to finding the right mix. We like to do a lot of videos and updates where it's both Craig and I, and then we talk about what's going on, and I focus a lot on the market and the things that will get in that will resonate with investors. The one thing I forgot to mention, but I'll say, if you're investing in a company and the person that's running the show is, say, more of a promoter but pretends to know about geology, big red flag.
Yeah. Yeah. Right. So
I
we've
don't
come.
pretend to know about geology. So what I know, what I say is what I know, because I have learned it. I'm not just saying something that I've heard. It's something that I've heard and I've understood and I've discussed. So I can talk geology, but I won't go past what I know as a non-geologist.
Mm. But that's why, you and Craig in the same video balances each other out and provides a different perspective. We've come to we're about to wrap up our webinar. Let's part with maybe a few takeaways. What are some of the things you'd like to impart investors take away from this session?
I would so much like people to go away being committed to becoming better investors. And I've given them a few things to think about. And if you do that, if you become a better investor, you're going to increase your returns. And that means focus on the people. Where do you want to be in the timeline? What type of project you want to back? What kind of risk are you ready to take? And make sure that what it's not somebody who's repeated you something. So take your Saturday morning or Sunday morning and go on CDAR, read prospectuses, read financial statements, go on SETI, read things about SETI and how it works and what the rules are, and learn a few basics about how the capital markets works in Canada. Nobody's like, I've got a law background, so I come at it from a different perspective, but anybody can go in and find out what's SETI. How does it work? I mean, there's so much information about it on the internet. Invest a few hours and you'll thank me one day, because you'll know more about the investments that you're making.
Great. We'll leave it at that. Thanks again, Alain, for some very insightful commentaries today. And thanks to our audience for joining us today. And again, a recording of this webinar will be sent to you if you're a registered attendee, within 24 hours or for 48 hours of this event. Thanks again, everyone, for joining. And thank you, Alain. Have a good day.
My pleasure. Thanks for having me.
Bye.